Hey everybody, welcome back. Well, we have a lot to go over. First and foremost, this line that we have right here, you can see the number, that is from CPI, and that is our 50% line from the 830 bar. For those that are familiar with this, we're going to spend a lot of time on this area to really dig in what's going on. We're going to talk about this trend. I'm sure everybody sees it. We need to talk about PANW and what's happening after hours. That's for sure. We're having a little bit of a blow up. We've had some usual suspects blow up after hours, but we're having some others that are making some really big moves to the downside. But most importantly, we need to talk about the NASDAQ and what's going on there, software, what to expect tomorrow. But let's just take a moment and drill into this on an hourly before we really get into this. At the time of this video, I tried to get this out a little earlier tonight, but I redid it after PANW because there's just some levels that I think you need to be aware of tomorrow, especially going into what we're going into. And we're going to cover some of this pre-market live earlier as well. But here we just have the hourly, and then we're just going to mark this 24 level. Now, a couple things. This is going to get pretty granular, but a couple things that I do. I always try to draw the most, like the lowest level, the lowest gradient that I can get. And then you'll try to start coming up and see if it can fit anywhere else. And if it can't, then what I do is I just go to the next one, right? That's, people always ask how I draw them. That's how I draw them. Okay, so here's that one. And you can see very clearly in here how this one was broken and how this one was played with, and then how we went here. Now, some people will say, well, no, that's a little too high, and you're here. It's semantics. It's the same spot. No matter how you look at it, you're breaking. And there's a certain pattern that's developing here, and you already see it. And we talked about this a little bit on Saturday and said you had to be aware of it. See how you're starting to hit those lower highs right in here. Okay, so we're going to clean all this off and just pay attention to this because this is important. See how you're hitting those lower highs? Now watch. All right, so there's another little demarcation line right there, right? Then there's another one right here. See it? See how you're riding those down? See how this is forming almost like a fan? When you start to see these declines, you need to pay attention because what's happening is the acceleration of selling is picking up. So I'm going to say that again. The acceleration of selling is picking up. Now, people will say, well, why didn't you say this earlier? Now, I didn't know how you were going to act on Tuesday. Obviously, nobody did, right? You could pretend that you did, but nobody knew. So here we are, and we could see these levels. Now, this is something that I use a lot, and I show it when I think it's pertinent. It's a private cloud system that I've been using for some time. I'm going to click off of that and just show you the more important part of it. So when this goes yellow, yellow just means caution. And you really got this little caution here Monday at 6 p.m., which we know, obviously, we weren't trading at that point, meaning the market itself wasn't open, but the futures obviously are. So that's something I'm a little concerned about, the fact that we're riding it down. And see how you broke here and then you tested it and then you retested it and ran? That's not what's happening. You're sloping here. So this puts us in a very difficult position. Now, if we just take the hourly and we just draw that hourly on those levels, this is going to tell you very clearly what you need to watch, 49.70. So you're going to want to watch 49.70 tomorrow. And people will be like, well, why do you already think that we're going to go lower? Well, we're going to get to that in a little bit. So I don't really use these clouds on the dailies, but what I do use is I'll use a different kind of cloud system. You'll see it every once in a while, these Ichimoku clouds. I'm not going to get into that tonight, but I do want to talk about the NQ and what's going on here. You'll see this little line. Now, you have a pattern right here, down, 1, 2, 3, but the third one was red, and then you have follow through with a new lower low close. The problem with this close is twofold. So the very first problem with it here, see this right there? Okay, so you're starting to close into this. In other words, all these wicks, let's blow this up and so you can dive into it. And people will say, do you really look at this level of detail? And the answer is yes. So see where you closed? See all these wicks? These were all price rejections. These were all price rejections that were in here, right, in February. Now, if you take that and you look at those price rejections, I want to show you a couple different things. And I thought it was better to do the video this way, so I reworked it. Let's clean this off. You can see that we're down, right? Okay, so you see this little doji sitting here? So you have 3 days to fix this. And if you don't fix this, it's formally an island reversal. And this is a major shift to what we've been dealing. So you see the gap? Then gaps down, 1, 2, 3 up, gaps down. Okay, these are falling 3, rising 3 patterns. I don't know how many people look at patterns, but this particular pattern, it doesn't have to be exact to that, but just assume that that's there, but inverse. This is a rising 3 and this is a falling 3. These are the patterns that are the highest probability of all the patterns out there, right? Just like a cup and handle, the gap is just assume that the bar is there. Same thing if on gaps, just assume there's a bar. So if you take a look at how this is playing out, it's not playing out great. On top of that, you have the island gap. So you have your level right up here, and you're going to have your level right here that you closed. Even if you use this, you still have it. You're going to say, oh, well, you could argue that you're still there. That's a tough argument, and it's not one that I'm willing to make. You could say that the wicks are there. Wicks are what? Price rejection. So in my universe, they don't really count. Right, what I'm always looking for is I'm looking for those open and closes. That's what I pay attention to, and you can see very clearly here that that didn't work. If you want to use the wicks, use the wick. It's free country. You can do whatever you want. I have found that using the body and not using where they reject tends to be the best for me. So, all right, so we have that. Now let's drop this to an hourly for a second before we go any further. Let's get rid of the pre and the post. So now what we're going to do is just look at this on a more formal basis and go, okay, well, what else can we tell about what just happened? And we just draw our trend line right there. Okay, this is what happened. You can make anything you want out of this, but this is what you have. All right, and that's really important. We're not here to prognosticate about the market. We're not here to tell you the market's going down, stock market crash, stock market rally. I'm here to give you my opinion and analysis of the market. Hopefully you learn something. And then you can utilize that to make more informed decisions for yourself, right? You should be trying to get better and develop the skill. Left shoulder, head, right shoulder. I'm sure we all say it, but might as well just point it out. So we just drop the line right here. People will say it's not perfect. Life is not perfect. Deal with it. Say it, left shoulder, head, right shoulder. Can't be any clearer that that's there right now. What could change this? Whoops, left, head, right. What could change this? What could make us not break this neckline? Well, NVIDIA could, right? And this is where it gets really interesting to me anyway. But see those levels? And you can tell already that we're below, obviously, the cloud and everything. So we're going to clean this off, leave the cues here for a minute, drop in the simplest of indexes and oscillators. And what you're going to see is RSI. Now, this is pretty important. See where we are right up here? Okay. See where RSI is? See how RSI hit a low? See how we did not hit a low yet? Okay. So the problem with this move after today is that's a confirm move. So what do I mean by that's a confirm move? We closed under that level. So that's telling you that this is coming down. Now, is this as high degree of probability as gravity? No, it's not. But this is definitely something that should be flashing all kinds of warning signals. Now, what could change this? Well, we're going to get to that in a moment. And we're going to get into these earnings, and we're going to spend a lot of time on them, specifically the earnings. I think we need to. Look where you closed, right on the 22. Now, you're down after hours thanks to a couple earnings that came out that were less than ideal, and we're going to address that. But I do think that this is something that we need to pay attention to. To be clear, this broke. It's pretty obvious that this broke. This is where it sits. Do with that what you will. Okay, I personally think it's something to pay attention to. That is up to you. But we are in that situation here where, once again, I do need to look at the stool. And we just need to remind ourselves of a couple things when we talk about the stool. So let's make this just a bear chart for a moment. And why do we need this? Well, we need this for a couple reasons. We have been driven by macro for a very long period of time. And we're seeing that the bond market's bouncing around, and there are trades that you can make off the bond market. We have people that trade futures all day long and options all day long just off the bond market once they learn how to do it, and they're very happy with that macro. But macro, fundamental, and technical is what makes the market work. It's not one, it's all of them, right? And think about it as who, what, when. Macro determines who's going to move. Out of those who's, the fundamentals determine what is going to move, right? And then the technicals tell you when it's time to get involved in that, all right? So the issue here is, where are we right now? Well, we were on macro because of all this economic data that was coming out, and we didn't know what was going on, right? So we were leaning on the macro leg, meaning we were leaning right here, okay? Then what happened after we started shifting that way? Well, technically we started just slowing down, and you can start seeing the slowing down in here, okay? So that's something. Then what happened with the fundamental side? Companies are missing earnings. Some companies are beating and they're not rallying. So that's really important as well. So now we have to talk about sentiment. And so if we take a look at something like net, beats, falls apart. TTD, beats, falls apart. Okay, this is telling you that you have negative sentiment or bearish sentiment, and that they think that this is a possible high. And that is definitely something that we need to pay attention to. When we start to see this kind of behavior, you must pay attention to it. When you see things like, and we're going to get to this in a second, but you see things like coin on decent numbers, and they were decent numbers no matter how much I trash it. When you start to see this, it becomes an issue. All right, so the who, the what, and the when, and what's happening to us right now is very, very clear. we are in a fundamentally driven cycle for the rest of the week. So we can look at these charts, we can talk technically about them, we can say which way we're leaning. But NVIDIA has earnings tomorrow night. FOMC minutes are also at 2 o'clock. Now, I don't expect a lot of really good news out of FOMC minutes, but NVIDIA can change the market. I mean, if you think one stock can't do it, it can. So if you want to look at the implied volatility, NVIDIA's implied volatility right now is set up at 11%. All right, out of that 11%, you can see how we're down 10 points after hours. We're going to get to why in a moment. But the implied volatility of the entire NASDAQ going into Thursday morning after Wednesday is 2%. That's the implied volatility off of Netflix or off NVIDIA. So if you think NVIDIA can't move the market, you're wrong. The implied volatility of the entire SOX is 5%. Okay, so, and that's the range. So if you were to look at this, well, that was the range as of here. So apologies, that range would be moving down to here, and then this would all move along with it. But the point that I'm getting at here is that this is a big deal. And this one fundamental data point can move the market. Now, for how long it can move the market, I don't know. Because if you go back and take a look at NVIDIA, and this is another important data point that all we can do, guys, is look at what's happened in the past and try to figure out what to do from there. So forget about this March, but let's just go back the last 3 where it's crushed it. Right here, you broke out, you just kept going. But if you looked at the 1, 2, 3 last times, what happened? They marked the high, okay? They marked the top on the market. Right? Every single time you really mark the top on the market. So you're seeing people that are predicting that that is going to be the same exact thing that is going to happen here. And that is one of the reasons why we're seeing some trepidation. But if we look at this technically, you finally broke the 12. Well, you have not closed below the 12 since you've been here. I use a 12, a 22, and a 55. So what do we have? We have NVIDIA that is down 10 points after hours. We're going to get to why in a minute. We're going to spend some time on these earnings. And then you have the 22 right here, right? Which we have never even come close to, which you could easily be tomorrow at 662, 664 before earnings. At the same time, you are breaking and getting back under the 70. If you ever watched any of my RSI videos, that is a very clear break and certainly something that you want to pay attention to. So the purpose of this video is just to give information. I had a ton of education on some trades that we did today that we did quite nicely on, even some stuff after hours. But the most important thing right now is to get this out so that you are aware of what's going on. See this break right here? Never looked back, never broke below the 12. Where are you today? Below the 12, and you're here. So are the technicals foreshadowing what's going to happen? Maybe they are, but I don't have an answer to that. I think NVIDIA could have a very good quarter. Here's where the problem came in. AMD came out and said that, by the way, they're not seeing the demand that they thought they were going to see, and they're having a little bit of slower demand, and meaning that their bottleneck is not as big of a bottleneck. Well, seemingly that this was already out last week. I don't know why today was the day that this was the news, but now look at what you're doing. You have closed below the 12 and the 22. I use a 12, a 22, and a 55. You should use what you're comfortable with. When was the last time you closed below the 22? You closed here. It's been since November 1st that you've done this. Look at the RSI. Look at how it's rolling. Okay, this is pretty clear indication that this is putting in a top. Again, NVIDIA comes out with a number. So, if the NVIDIA comes out and says 2025 is going to be $34 a share, it might not be. That could rally the entire market. Right now, all we have is what we have. And I know that sounds poetic, but that's it. That's all you have. So you go on a decision and you make assumptions based upon what you have. But you must understand that even though the NASDAQ right now, as I'm recording this, is hitting new lows, right, on the day, it's actually down pre-market lower. So when it's doing that, but all we have is what we have. So that's all we can go on. So they've come out and they've said, by the way, the bottleneck is clearing up. Now, that just means that they're able to produce more. It doesn't mean certainly that demand is waning, but these things have moved a lot in a short period of time. And so based upon that, this is what we're dealing with. Remember, NVIDIA is up 50%. Okay, so we're up 50% from the last earnings. The other earnings, you were essentially flat when you came out with them. I mean, you're not here so much, but you were pretty much flat when you were coming out with them right around that area. It's very different where you're at now, so expectations are higher, and this is the stuff that you're going to deal with. So nothing is going to move the market more than NVIDIA. Even FOMC minutes, what are they going to say? No matter what they say, we already know that they're not looking till May at best, June, right? So we know this. So if we take all this into account, we know that the next big event is NVIDIA's earnings, and we know how it's acting ahead of this. Apple as well. We talked about this on Saturday in great detail. You must hold this trend line, and you're trying. But at the same time, here's the 200-day moving average, and you've cracked it. And now you're below the 200-day moving average for what? 2 days. You start getting below it and closing below it 3 to 5 days, you have a problem. See how it didn't do that for 3 to 5 days in here? You got those green days and boom, you're over. Okay. You really want to watch this here, guys, because these are all starting to decline, all of them. And you really don't want a declining 55-day moving average. And you really don't want the way that this is starting to roll over. So we have to see what happens with NVIDIA tomorrow. No, one stock does not make a market, but it could spur demand. The problem with that is that we're already getting signs that certain companies are already saying demand is slowing. What's interesting to me is that we're not seeing that with the consumer. You look at these names like Ralph Lauren that are they're just powerhouses, right? All these names, A&F, these are names that we're actually in and been in for some time. Well, Ralph Lauren, we just started, but you just look at these names, they're powerhouses. They just keep pushing and grinding higher. And you have all these other names that are really pushing. But let's talk about earnings, and then we need to talk about another sentiment indicator that is something that I use a lot, and it is probably one of the easiest things. I'm going to do it at the end. So I just want to go through some of these highlights because I think it's important. Now, to start, Toll Brothers beat. Just to be really clear, Toll Brothers absolutely crushed. They were looking for, I believe, 178. They came in at 225. Sales were 186. They actually came in at 195. So they crushed. But what's really important are things like this, what they say on the conference call. That's why there's always two events out there. There's the earnings and then there's the conference call. Now, what we're seeing here very clearly are notes from the conference call. Based on our first quarter results and strong start the spring selling season, we are raising our full year guidance. All right, so while we're about to talk about tech and what a dumpster fire it is right now, what we're saying is we're saying that the home builders are on fire again. Toll Brothers is at an all-time high right now, which is just absolutely staggering if you think about it. Commercial developer for net cash proceeds of $180 million, which will result in pre-tax land sale gain of approximately $175 million. Our second quarter, factoring both the increase of our home building guidance and the impact of the land sale, we now expect to earn $13.25, $13.75 per diluted share, with a return on the beginning equity approximately 21%. At the end of our first quarter, we owned or controlled approximately 70,400 lots, providing us with sufficient land to increase community count over the next several years. They have all they need to do to build out, guys. And what we're seeing is we're seeing that demand start to pick up. And they're actually, at one point tonight, they were actually over like 108 or something like that. So we're starting to see that. You're also starting to see Nail move up after hours as well. So this is another great way to trade it. And this is also coming on the heels of a couple things that we should definitely be aware of, or you should be aware of. Home Depot. So this was not the greatest of calls whatsoever. It actually gapped down to 355, but close near the high of the day. So we are seeing strength in that area, and I think it makes sense for us to talk about it and that we are seeing strength there. Now, there are some blow-ups out there that we should definitely pay attention to. For example, if we look at TDOC, you are below every single moving average. You can see that they missed on the revenue side as well. Now, this won't take very long, but I think it's definitely worth noting, and I don't think anyone's going to be shocked. Maybe, Kathy Wood will be shocked because she's still in the trade, I believe. But they're going to lose more money than expected, and that's not something that we really want to pay attention to, is it? We really don't want to pay attention to stocks that are going to lose more money than they're expected to lose. And you see first quarter right here, 55, 45 versus 43. Look at the revenue. Okay, so the revs are going to be way off. And what these guys usually do is they do this kind of thing where they're like, oh, well, things are going to get better later. We're going to see 24 estimates are going to come down. And somehow that's miraculously going to happen on what? It's going to happen on less revenue? Okay. Good luck with that. So when you start to look at that, you start seeing like the flim-flam, and you already start seeing that they missed their guidance. That's what you start to see here. What we refer to as very clearly just flim-flam. And then you look at where you closed after hours. And I just think it's important to realize like this is what you're dealing with after hours, and this is what you're going to be walking into. It can't even get up off the mat. So I really don't know who's going to be rushing to buy this tomorrow morning. Maybe some value guys are going to find some kind of valuation out there to make sense of it. I'm not really sure, but to me, this is not something that I would go near. Now, this isn't the kind of stock that's going to move the earnings or move the markets or move a sector, right? It's not. SEDG is something that can, and right now you're down about $10. And quite frankly, you were down a little bit more. This was actually a great short after hours, and you can see that really clearly. And one of the things that we like to do for those that are newer is you just you drop an anchored VWAP on them, and they kind of tell you exactly what's going on. Usually you just drop it, and then you just can watch it on a 1 very clearly. told you exactly where you were going to reverse. I mean, it's not rocket science. There it is. But you can just kind of see how it dropped from there. Again, just drop an anchored VWAP and just see where all the players are. And you just see it kind of mellowing out as the evening goes on. But this was not what I would refer to as the best quarter when you sit there and you miss on the revenue side. Now, I would appreciate your comments about tonight's video. Usually I try to get a little bit more into some trading and education, but I just think there's so much information out there right now that it makes sense to come in prepared tomorrow. So I hope you find this helpful. But as always, please comment on this. And if you do find value, please share it, because I purposely do not run ads. And you can clearly see that, and the algorithm doesn't like that. So despite challenges we faced in the second half, we concluded with $3 billion, just below 2022 levels. Probably not something to be excited about. But let's get into just the basics. The company reported revenues of 316, down 56% from 725. So let's just say it again. 316 down 56% to 725. Prior quarter down 65% from 890, same quarter last year. Revenue solar segment were 282, down 58% from 676, down 66% from the same quarter last year. How this thing's even at $70, $80 is just a miracle. GAAP gross margins were negative, okay, compared to a last quarter, which was 19, compared to 29.3, same quarter. This is pretty much a dumpster fire. And the fact that this thing's even remotely hanging on, I just think is a miracle. I really do at this point. This is a really, just absolute disaster. And I think eventually I'm just going to go to a weekly, because it'll make it so much cleaner and you can see what's happening here. To me, this thing's just a matter of time before you start cracking back into the 60s and you start working your way down to the 40s. I just don't see anything that's going to save it. You might get a short-term squeeze here, but that's it. All right, now let's go to the big dog. And you can see where PANW was 366 and now you're at 292. Okay, so this is what you've all kind of been waiting for. And this is pretty much just an absolute disaster. Now, where does the disaster come in? Because they have revenues and they have earnings. So where is the disaster? The disaster was in guidance. And this is what we refer to as one of the leaders. So when the leaders blow up, it means all the other little will fall, right? All the little guys will fall. So we're going to show you CrowdStrike, Zscaler, and go from there. But here it is, soft guidance, and they're trying to push this. But 126 to 129, this was the estimate. You can't miss, you need to beat, okay? Revenue, 195, 198, they're supposed to be at 204. All right, so you would say, all right, well, that's not awful, you need to beat. Fiscal year, 551, they're telling you maybe we're going to come in line, actually. Revenue, 820 was the estimate, they're telling you 8. So they're saying, by the way, right, we know where we're supposed to be, but we're going to come in light. We could come on down almost 5%, keyword. So when you see that, that's not good. And so people say, well, wait a minute. I thought AI is booming. I thought this was booming. I thought corporations were booming. Therefore, nothing is booming. You know how the market works, right? We talked about this in reflexivity. You're expecting one thing and you get something else. Okay. And this is exactly what kind of happened. So you remember that video from about 3 weeks ago. I will clip that out so that you can refer to it, because that was a long video. All right. So what do you have? You have a dumpster fire. There's really no other way to say it. It is what it is. This is the hand that we're going to be dealt tomorrow. And because of this hand, this is the other thing you're going to say. You're going to see people come in, okay? And everybody that bought NVIDIA, that paid up, everybody that bought calls, because today's their day, now they're going to deal with this. And now they're down $10. Everyone that bought SMCI, because SMCI was going to come back to its glory days of Friday. Remind you, this thing's still up almost 100 and change % from where it just was. And you can see right in here how this is acting, all right? So what does all this mean and what is all this telling us? Very, very clearly, it's telling you one very core thing. Some companies are just not doing as well as expected, period. The solar doesn't bother me because it's really interest rate sensitive, okay? What really bothers me is when I'm seeing these kinds of names blow up like this. This is not good. This is a real problem. And this is something that I'm really curious about how this is going to affect NVIDIA, if it even affects them, right? It might affect them tomorrow, but what's going to happen with NVIDIA stock? Now, if you were on the pre-market call this morning and you were part of the debacle, which was me trying to work the new camera, I'm going to give you a quick tip, because I at least owe you that for putting up with my nonsense and trying to work the new camera. So you see Bitcoin here, and this is how you can tell that you're going to start having problems. All right, see Bitcoin here? Anybody can do this. Anybody can do what I'm about to show you. We're going to drop this to a 5-minute chart, right? Then we're going to open this up. And then what we're going to do is we're going to add Mara. We're going to add Riot. Okay. And then we're going to add MSTR. All right. So, and then we're going to look at the day for a second, just today. Now, what do you note more than anything? See Bitcoin? Okay. Look what happens to the underlying names and how they start to crack. whenever the underlying names are not only underperforming the asset, but going down while the asset is going up, you have a problem. Okay? Whenever the underlying asset is going up, whether that is gold and you're watching Newmont Mining drop, whether that is copper and you're watching SCCO or FCX drop, whatever it is, anytime you see this, these are not buys. They are not, quote, cheap. This is a problem. This is a real issue. This was something where once we identified it, we were able actually to go short. Even though I started long and lost money, I was actually long this pre-market. I was able to go short, buy puts, and do quite well with the puts and do quite well in the Mara short. The reason I was able to do this was because I understood this and I understood the dynamic. So I'm going to say it one more time. Whenever you have an asset class, and that asset class is underpinning the stocks, and the stocks go negative, you have a major problem, right? Not a minor one, you have a major problem. I would also tell you that you can see that MSTR, as to me, has always been the one to buy because it's trading at a discount to its Bitcoin, and it owns a $500 million company. One thing that I would strongly suggest that you start using, and I did post this for everybody, and if you need it, I'll drop it again in the room, or I'll just drop it in the community tomorrow when we do the pre-market if you guys don't have it. Let's go back to this at 9 o'clock and just see here and see how far back we can get to that. There you go. Let's just start seeing what sectors are actually coming in. Look at XLP and take a look at this. Watch this. So you have XLP, right? And I'm going to drop this to a bear. I'm going to go to a bear chart. People say, why don't you just say plain chart? I don't know. I don't have a good answer for you. For some reason, I named it B, bear. Maybe, who knows? But watch this. Look at the amount of buying at Coca-Cola today, all right? It tells you that they're getting defensive. That's it.